What's going on, guys? Welcome back to my YouTube channel. I'm Emmanuel, and for all of the new subscribers we gained from the last video, thank you so much. Right, guys, so today's video we're going to focus on how you can start to grow your dividend portfolio and get you started on your dividend investing journey. Okay, so to recap, a dividend is the distributions of earnings that a company pays their shareholders. So this type of income is truly as passive as it gets. Once you become a shareholder by buying shares of the company continues to operate, and from the earnings that it receives, it distributes payments to all of its shareholders. Alright guys, so I'm going to hop onto my computer now and I'm going to show you the very first steps you need to take to start dividend investing from today. So the very first step you need to do to start investing in dividends is you first need to put aside money towards investing. Okay guys, we're not talking about a huge amount, but essentially you need to put aside an amount that's comfortable for you every week. I'm going to quickly jump into my Trading 212 app. So here we are. Let's look at a company called Tesco. And Tesco, if you're not familiar with Tesco, if you're in America, guys, Tesco is pretty much the Walmart of the UK. So here, this is Tesco share price. If I wanted to buy one share of Tesco, it will literally cost me £2.49 to buy a share of Tesco. All right, guys. So with this, you can see it doesn't take a lot to start investing. Just put money aside that you are comfortable with. Okay, my goal is I try to put away between £100 to £200 every week, and there's a whole list of companies, guys, that you can invest in. So here is Into Properties. For example, I mean, guys, look, it's gonna cost you, if you wanted to buy one share of Into, it's gonna cost you 5p. You can literally go out and find 5p on the floor. Okay, so it doesn't take a lot. There really is no excuse, guys. Just start to be deliberate, start to put money away, and set yourself targets. Okay. Alright, guys, so my annual dividend target is actually to reach $5,000 by the end of the year. So that works out roughly about $416 a month. Okay, so with that said, guys, I'm going to jump into my portfolio. So this is my current dividend portfolio, and I use the website simplysafedividends.com, and that's my dividend tracker. So here, my dividend portfolio at the moment is sitting at $759. And the good thing about this about this tracker, sorry, is that it shows you your payment calendar. So you're able to have a look at the companies that will be paying you, which month they're going to be paying you, and also just a great way to just keep tabs on your portfolio, really. Alright guys, so the second step, once you've identified a company that you understand the business model, it's within your circle of competence, you need to find out if they pay a dividend. And if they do pay a dividend, how much of a dividend you're going to receive. So to do this, I go to Google, I type in Yahoo Finance. Once you click on the first link there, this brings up the Yahoo Finance page. Now let's think of a company that we all know and all love. So here we're going to choose Microsoft. So right here on the summary page, you can see here the dividends that Microsoft pay their shareholders is 1.9%. Pretty low, pretty low. But let's look at Apple Inc., for example. So Apple Inc. also, well, yeah, they also pay their shareholders a 1% dividend yield. And a dividend yield, guys, is pretty much just the amount of money that the company pay their shareholders for that year. Okay, so once you've identified the company that you like, you know it pays dividend at the end of the year. The next step is to check the company's dividend payment history, because you want to make sure that the company has been consistent with dividend payments and whether they've grown their dividend payouts over the year. Sorry. So how to do that? I go on morningstar.co.uk, click on the first link. I like Morningstar because they do really great analysis. Type in Microsoft. Here we are. And as we've identified using Yahoo Finance, the dividend yield is right here at 1.4%. So to find out Microsoft's dividend payout history, you click on Financials, and then you click on Dividends. And here it provides you with the historical dividend payments from Microsoft. Now Microsoft have actually been paying dividends since the year 2003. And also on the right hand side here, guys, you have the amount. So if we scroll down to 2003, Pretty much from 2004, they've been quite consistent. So they've been paying their shareholders a dividend of 8 cents every quarter. Then it went up to 9 cents, 10 cents, 11 cents, all the way up now to 2020, where they're now paying shareholders a dividends of 51 cents a share. So it's always important, guys, to have a look through the history whether they've been consistent, because what you find is a lot of companies cut their dividends, especially during hard times. So during the 2008 crisis, we actually found a lot of companies that paused their dividends, and that's actually happening right now. So if you check Shell, petrol company, if you have a look, so right now Shell's struggling. There's a lack of oil demand, and for the first time since World War II, these guys cut their dividends, which is not a good look. The next important step is to pay attention to the net income trends of the company. Now remember, guys, good companies pay their dividends from the earnings that they receive at the end of the year. Okay, so but you have to also bear in mind there are companies out there that pay dividends by taking out more debts. They take out loans to pay the dividends, because if a company cuts the dividends, it's never a good look for the investors. It's an indication that the company might be struggling financially. So you need to pay attention to net income trends for the company. And how do you do that? We jump back straight to morningstar.co.uk, and we are on Microsoft. So pretty much where you went to find the dividends and the financials, you look at the income statement. And if you look here, so since 2015, Microsoft have been producing a net income, and it's been growing. The trend has been growth. It signaled growth. Yes, in 2018, it took a big drop, and we will go into further details as to why that drop happened in later videos. Because if you notice, the net revenue actually did go up. It didn't really affect their dividend payouts as we saw from the historical data. But yeah, this is pretty much for the net income trend for Microsoft. I would say it's growing, and that's a good sign that they're going to keep up with their dividend payments. Another company that I've been looking at but I haven't actually invested in just yet is Curtiss-Wright. They are a manufacturing company. I love this company's financial statements. When I look at their income statement, you can see here, year on year, their net income has been improving. So I'm just waiting for a great opportunity to invest in this company, and there's other reasons why, which again we will dive deeper as we go on with this YouTube channel. But it's definitely important, guys. Make sure you have a look at the net income trends of the company before you decide to part with your money. The next most important step is to check the company's debts and liabilities. And also you need to pay attention to the company's assets and also their cash positions. So to do that, again, you jump straight into Morningstar. And for this example, I've actually brought up Google. And click on Google's financials. Once you're on the financials, you click on Google's balance sheet. So once you're on the company's balance sheet, here you will find all of the company's total assets and their total liabilities. So it's important to pay attention to the company's total current assets and also the total current liabilities, because if a company has current liabilities that they have to fulfill within the next 12 months that are higher than the total assets that they can generate to cash within the next 12 months, one of the places companies go to raise more cash, or to preserve more cash, sorry, is to cut their dividend payments to shareholders. Alright guys, I hope you really enjoyed that video. If you did, please don't forget to like and subscribe, and also share it with other friends or family that you think will be interested in investing for dividends. In future videos, we're going to dive even deeper. I'm so excited. We're going to be looking more into companies' financials, how to read the income statement, how to read the balance sheet, and also how to read the cash flow statements. So don't forget, guys, share it with your friends. Thank you. See you in the next one.